We all know that Bitcoin has been extremely correlated to stocks and broader equities over the last few months, and we now have a break in that correlation to some degree. And if it does happen, like we are saying that it might be happening, you better strap in. We have a chart here showing how the S&P has trended over the last few months. From January until now June, the S&P 500 is down 13.3% in total. But as Bitcoin has been down tremendously also, the S&P has gone upward over the last few days. And it looks like it is now breaking from that correlation to some degree to the upside that Bitcoin has been in. So we have a tweet here from Justin Bennett. He says, Bitcoin has been positively correlated with the S&P 500 for some time now. The S&P had an impressive rally last week while Bitcoin was still sleeping, snoozing. Looks like BTC is about to play catch up. This would put it in the mid-30 range at the current S&P levels. And he's got a nice little chart down here with the arrow for those that aren't as educated. Shows you up and to the right, baby. Blue is Bitcoin. The red or the orange there is the S&P 500. So basically what he's saying is that the S&P has been correlated to Bitcoin for the last few months, at least since January. And as the S&P has broken to the upside, he expects to some degree, if that correlation stays, for Bitcoin to do the same. Now, as Bitcoiners, we all realize this hasn't always been the case. Bitcoin has been trading in correlation, but that is not what always happens. This may or may not take place. Trade at your own risk. But I do think it is an interesting narrative given what we've seen, one, at the correlation level, but two, with the S&P over the last week. So we have some more charts here, I think, that show exactly what has been happening from a correlation point with Bitcoin relative to gold, the S&P 500, Ethereum, bonds, etc. And they show exactly what we're talking about, right? Which is that Bitcoin has been correlated to a bunch of different assets over the last few months, which weren't necessarily the case beforehand, and now it has been. So there's people that are much smarter than me that maybe have shown that it may not be correlated to that degree going forward. But for the time being, we will see what happens. John, what do you think about this? Yeah, there's the chart. Here we go.
That's
gold, S&P 500. That's 2021?
That's 2021. You can see the correlation. Obviously, Ethereum, a smaller market cap coin, outperformed Bitcoin in 2021 during those bull runs. But everything else was kind of bouncing between correlation and uncorrelated. So that 0.2 to negative 0.2 is kind of that range that they see the correlation in. And then obviously the correlation is literally just how much did one go up versus what was it supposed to, or what does it normally do? And then what about another asset? And that's how they find that correlation.
Yeah, this is an interesting chart here, obviously, because at some point they all cross kind of in the middle and then they head separate ways. But the Bitcoin part is more interesting to me because Bitcoin has always had that narrative where it's a non-correlated asset, right, that has appreciated well over the last decade. Even on a volatility-adjusted basis, if you look at the Sharpe ratio over 2 years, 5 years, 10 years, et cetera, it's still outperforming most of these other stocks, bonds, et cetera, real estate, whatever it might be, because of that volatility of the upside, because of that asymmetry that it has represented. So as we get into higher number nows and higher market cap, Bitcoin was over $1 trillion market cap, right? Now we're at 6 something. So you get to this point where while it may be moving in tandem, I still do not think that's the narrative, right? Institutional flows have driven Bitcoin's price over the last year, or at least 2 years. And what we're seeing now is with the Fed in a difficult place, at least here in the United States, it's very difficult for a lot of these institutional shops not to treat it like a risk asset. That's exactly what they're doing, right?
Yeah.
It's trading downward with stocks. It's trading downward with other risk assets.
People are selling across.
So where does that decoupling happening? There's certainly been evidence that I've seen in the past of like a time period where maybe it trends in that way for 3 months, 6 months, et cetera. Will Clemente comes on the show all the time, the wizard, talking about how this may eventually change and what the levels Bitcoin would have to hit for it to reverse in that direction. I don't think it's going to stay correlated to the S&P 500 for a longer period of time, but it is interesting to track over the last 3, 4, 5 months how correlated it has been and what a move in the S&P 500 now to the upside might mean for Bitcoin.
Yeah, I think over time, though, it will get uncorrelated, and this is just my personal opinion. But right now, we're going to see the correlation just simply off because people are treating it like a risk asset, and the big players are treating it like a risk asset, right? So when you need cash or you need to get out of a trade that you may not necessarily have a ton of conviction in, this is the time, right? People have been selling for the last 6 to 7 months now at this point, trying to get out of certain assets, trying to at least have some liquidity in their portfolio and be able to deploy cash when they see fit and when they see opportunity. And I think that's what people are doing with Bitcoin. They're doing it with stocks as well. Maybe some wash trading was happening at the end of the year as well. They didn't buy as much as they sold or whatever it is. But clearly we've seen a massive price decline. And I think that's just based off the broader idea and macro environment of, hey, we're selling off assets. We need liquidity. We need cash in our reserves.
This is good for traders. This is good for traders, but this is part of the reason why I don't really look at a lot of this stuff, because that's an interesting observation. You know, the person that made the tweet and showed on the chart, hey, look, we may have 5% to the upside, 10% to the upside, whatever it might be. But at the end of the day, there's different types of investors, right? You can be a trader or you can be a long-term investor and just dollar cost average into an asset and hold it for a long period of time. And I'm the latter, right? Which means that I don't really look at those charts and get super excited because maybe there's some volatility in the time being to the upside where you can gain 5, 6, 7%. And a trader would get excited about that due to technical levels or kind of where they see the price going. But ultimately, that doesn't make a huge difference to me, right? You're dollar cost averaging over a long time period, and you're holding this asset, planning to hold it at least for the next 5 years, 10 years, 50 years. And that ultimately takes away a lot of these decisions around having to worry about the price on it. I don't even check the price most of the time, right? Like I just know that, sure, it's in this range, it's trading, people are talking about it, all these things. But when you're in a market like this where it's trading directionally for a long period of time, it's much easier to be in a position like this where you're just continuing to do exactly what you do. You know, days are going by, you're buying more Bitcoin, you're buying more Bitcoin, you're buying more Bitcoin, and you're not necessarily worried about, oh, maybe it goes up 5% tomorrow, like I should try to trade that. I don't really have any interest in doing that. There's certain people that are good at it. I just know I'm not one of them. So my general advice around this kind of stuff is like, know what you're good at, know what you're not good at, know what you're optimizing for and what you're trying to do long term, and then attack it from that standpoint. Like that stat is probably helpful to some people, but to me, it doesn't really matter all that much.
I agree completely. And one thing I do is I'm super I'm terrible gambler, terrible day trader, like terrible trying to time the market. And one of the best investment principles that has done well for me is just timing the market, not timing the market, right? And just being invested in a asset that you believe in over a long time period. Whether that is Apple stock, Amazon stock, Netflix stock, like it doesn't matter if it's an equity, a commodity like gold or silver, or even crypto like Bitcoin, right? It doesn't really matter as long as you have a long tail conviction and you actually have that conviction. So when you see those 80% drawdowns, 40, 50% in stocks now, you still hold it and you may even buy more.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.